in a release, did confirm that they were essentially turning Nigeria into an import destination. So rather than focus on manufacturing, they were going to be importing essentially here into Nigeria and selling. Uh, I mean, of course, there was a lot of debate about this in the news, and a lot of people complaining that, look, we seem to be losing a lot of businesses. People are going from manufacturing into importing and trading, and so based on that, we do lose some jobs. But there is another side of the argument, and the other side of the argument is that whenever there's high inflation, people should just focus on cheaper things. I mean, things just prices just have to come down because if local manufacturing is not leading to cheaper products, and foreign or imports could lead to cheaper products, then why do you just focus on local manufacturing? That seems to be an argument that some people are making. And that kind of makes sense, even if you don't like it or not, because at the end of the day, people just want to be able to afford things. That's really what is important right now. And with inflation at the sort of numbers that we have it today, 27%, we're at a period where, look, what your focus is right now is to bring down prices of goods and services. And by the way, I do hate inflation a lot. I don't know if you guys noticed that. Inflation is evil. Inflation is what any government doesn't want to ever face. You don't want to be in a situation where you cannot bring down prices of goods and services, or just allow it to keep skyrocketing as we have been seeing over the last 2 3 years. I can't start to explain why inflation is evil. I mean, think about it. Different reasons. Is it about substandard products being pushed over the market these days? And yeah, someone the other day that even the markets of TV and remote controls are substandard these days. Yes, like everything seems to be substandard. Things get to small a lot, and that's typically what inflation causes. And of course, the fear as well is with the drugs market. A lot of fake drugs. Inflation just causes everything. So for the government, I think that is what they are essentially facing because they cannot allow inflation to persist, and so that is why it appears a huge part of the policy is essentially to drive prices down, even if it means encouraging import. All right, so another interesting news that hit last week was the Dangote refinery. Finally, it did receive, I think it was 1 million barrels of equivalent of crude, which it's going to use to jumpstart its refinery. And the gist I'm hearing is that it does need 6 million barrels, so it has gotten 1 million barrels and still requires another 5 million barrels for it to go. But what's interesting is that it's not immediately going to be producing petrol, which a lot of people are keen to see. But it's going to be producing other products, diesel, and of course aviation fuel. And trust me, those really matter as well, because diesel alone is one of the major reasons why you also see inflation, because diesel cost is incurred mostly by companies, and those companies tend to pass on that cost to customers through product price increases. And so the fact that Dangote, refinery is about to start, I think was just one of the best things we heard during the week, and that got me really, really excited. Finally, after almost a decade of talking about this refinery, it does seem like work is about to start, and that gladdens my heart a lot. I'm hearing that the first set of crude, it's going to be out in the first set of product. It's going to be out in January, just a few weeks from now. They just received first batch of 1 million barrels of crude from Shell. They're expecting a few more batches. I think it's going to be five installments, and then they can now start to produce as much as possible. And according to the data that we got, that refinery can actually meet all of Nigeria's requirements. So that's quite astonishing. It can meet all of Nigeria's requirements. And so, even though the government doesn't really know for sure how much petrol, especially that we consume in Nigeria, some people tell it's 40 million liters per day or something. But I mean, take that data with a pinch of salt. But then, the information that we get is that it's going to meet the entire, uh, you know, requirement that we need as a country. Another interesting thing that I got about the refinery is that it would give us, not us, the refinery itself would generate around $27 billion annually in revenue. That is just incredible. I mean, think about it. Nigeria, the federal government, or Nigeria earns the equivalent of about 30 to 40 billion dollars in you know foreign inflow, forex inflow from crude oil alone in a year. And if you also look at diaspora remittances, that's the money we get from diaspora Nigerians, it's around $20 billion a year. And of course, you also look at money that comes in from foreign investors, um, which we call capital importation. It's typically 25 billion, $30 billion a year as well. And usually when we have that kind of inflow, and the exchange rate tends to be pretty stable. And so, if Dangote Refinery has a potential to do $27 billion in revenue in a year, don't you think all that money is going to come into Nigeria as some form of FX liquidity and could help the FX situation? Actually think so as well. And so, if you look at it from that point of view, it does look like there's just a lot of positives around this refinery coming on stream. And the negatives, there's just very limited negatives. And anything people can tell you is that, well, it looks like it's going to be a major monopoly and they're going to monopolize the entire market. Small players can't play, there won't be competition, blah, blah, blah. You're going to hear all that stuff. Trust me. You're going to hear all that stuff over the next months and years. But in the meantime, I think that it's just more wins than losses, than negatives. And so, I mean, we do hope that all of this comes through, and that's what we're hoping happens. And then maybe coming through is not that the refinery is producing and all, and the company is making money. At least the lives of Nigerians are improved, and so we don't have to focus a lot on importation of fuel, which happens to be Nigeria's largest source of imports. Where we get the most imports from is where we spend most of our imports is in fuel, and that is not good at all, for the country. And so, but now with this, we will not need to spend a lot on fuel, when it comes to importation. Right. And so interesting thing as well that happened last week on the macro side was foreign data. We did get our foreign data, our foreign importation data, balance trade data from the MBS last week as well. And interesting thing about the data is Nigeria did have a trade surplus of 1.89 trillion again in 2023 third quarter. That's what we got. 1.89 trillion in foreign balance of trade. So that essentially means that we got a lot more export than we did compared to import, which is not bad because when your balance of trade is positive, then that is net good for your economy. I mean that's conventionally what it means, and so Nigeria did get a lot more exports compared to imports. And I'm going to try and maybe just give you a little bit of rundown of some of those numbers as was published by the NBS third quarter balance of trade, like I said, was 1.89 trillion compared to 1.25 trillion in the preceding quarter. So total trade, that's combined exports and imports, was about 18.8 trillion naira. And of course, exports alone was 10.3 trillion. And a lot of that export was essentially, crude oil. Crude oil and gas makes up over 90% of Nigeria's exports today. So over the last 8 years, we still haven't been able to diversify that export number. So it was just about 10.3 in Q3 alone. That's just one quarter. And of course, imports was 8.47 trillion in the third quarter. Most of that import, a huge percentage, I think it was over 20% of it or so, was essentially on petroleum import. So that just shows you how much the Dangote refinery can suck out in terms of the need for us to spend our dollars to import because If you're spending 1.8 or so, trillion on crude oil export, then that's or about over a trillion on crude oil export, then that essentially is almost like $1 billion on crude oil exports alone. And of course, Nigeria has trading partners, and China continues to dominate. China has been dominating for almost a decade now. China is the largest, destination when it comes to, um, you know, imports into Nigeria. China is like number one. It's always been number one. It's been number one for years now. And so, from what we gather, China alone we constituted about 1.9 trillion in terms of total imports into Nigeria, and that's about 23% of the total. Of course, next to China is Belgium and India, and so you want to also look at those trends, and if you look at some of those countries where we're getting imports from, do you think that the sort of products that are coming from those countries are really quality products? I actually think you're going to get a lot more imports from countries that are typically associated with, maybe substandard products. Not that they are substandard, but compared to maybe countries that have a lot more higher quality products, and that is not bad at all because that tends to happen in high inflationary environment when people are looking for things that are cheaper, things that you can afford, and so that is why those imports from those countries would likely continue to go a bit higher. So that essentially was some of the macro news that I heard last week that kind of interested me. There were a whole lot of other ones like that, that made the news last week. That I don't know if some of you may have had any, yeah, like I always say, if you have any questions or anything that you want to, or any discussion points or things that may have concerned you last week that you want better information from, you can always ask me. I can see Bukala's hand is raised already.
There was this particular article I saw about the Cotonou and Nigeria transaction, the two presidents. So I just wanted to understand better if that is actually true and whether that portends for us as an
Could
economy.
you elaborate on that a bit?
When you talked about certain commodities to be imported, like food, clothing, and some other stuff, and there was some agreement between the Cotonou president and the Nigerian president. I do know at some point we've been trying to deal with this issue of imports
Mm-hmm,
from
mm-hmm.
Cotonou trying to shut down the border and also like, is that what would it do to the economy? Is that some sort of a relief to the economy, or this will further worsen the capacity of local industries to manufacture what I think are on those lists, rice, bringing in rice again and all that.
Very good question, Nicola. And like I said earlier, and I also put that on my Twitter handle last week. It appears that the current government is likely going to be, unlike the previous one, less focused on local manufacturing. It's not like you're not going to encourage local manufacturing, but I don't think it's going to be a cornerstone of their policy, because when you focus a lot on local manufacturing, then you tend to be forced to stifle imports or trade in general through increasing of taxes and tariffs and things like that. And that tends to lead to higher product prices, at least in the short term, because the bet is that you hope that the local manufacturing sector would have built enough capacity over the years that they can now start to drive prices lower. But that hasn't really happened because the local manufacturing companies as well have had to essentially face the same kind of headwinds that Nigerians have faced. So they don't have access to forex. Power is still a problem. There's still a lot of supply and logistics issues within the country. Some of them face a lot of multiple taxes, so it's difficult for them to actually price things. And then they also pay a lot in importation of raw materials, which I guess that deal is meant to address. So that is some of the challenges that they face. So when you're in a high inflationary environment, you don't tend to want to just focus a lot on local manufacturing. So that is why there's emphasis now on trying to reduce a lot of the import barriers. Like you heard, the central bank governor said it 2 weeks ago that they're not going to continue with those 41 ban items that was in place during the Emefiele era,
Mm.
and which a lot of those things were actually in place because we're trying to, encourage local manufacturing. So
But
those things are.
will that help in the long run?
So it
Because
does help with prices because prices tend to come down. Price of goods and services reduce. They're not as high as they should be because then people can now start. Because remember, when things are very expensive, people look for substitutes, right? So whether it's toothpaste, whether it's household food item, you tend to look for substitutes because at the end of the day, you just want to survive and go on. And so when you don't have cheap substitutes, then that's a problem. So that is why sometimes what you tend to see is what we call sachetization or shrinkflation, where companies now produce things in sachets and make it smaller and all that, so that it can get to a price point that people can afford. For example, some people might not need an entire 1 liter of milk. They might just need 0.2, 20% of that just to get by daily, and then you're going to see a lot of imports like that will come in at different prices and then outcompete superior alternatives. And that is why it appears some manufacturing companies are shutting down and leaving because even though they are setting up plants here, there's still a lot of local economic headwinds that is making it a lot more difficult for them to operate. So rather than stay here and operate, they rather just trade and let the local distributors take on that risk of economic headwinds. So, like I said, that's going to be the focus of the government, and they are going to continue to encourage a lot of competition in trade, especially with imports. And because, again, like I said, it's all driven by inflation. The focus is to bring down inflation. So even if it means entering trade deals with other countries that share the same border with Nigeria, so that people can also import from there, then all well and good. We still 90% of our imports is still from Nigerian destination import destinations, so not just outside Nigeria. But then
But my fear is we're going to be so import dependent at the end of the day. We are we striving towards being an industrialized nation ourselves, like the way China has done, and look at where they are. We should be at par with such countries, given the resources we have and our reputation as the most populous African country because we have the natural resources, we have the human resources. So are we wasting uh, resources here?
very, very good point you make, Bukala, because that has always been what we've been saying since that look, we should have a country that as a nation with 200 million people, we should have local manufacturing
And
capacity because,
youths as well.
yeah, especially youths, average age is 17, 18. And we tend to import nearly everything that we use in Nigeria. But you know what? What they will tell you as well in development economics is that you also, as a country, have to focus on what your competitive advantage is, right? So think about it. What's the point? You're wearing headphones. If your headphones is locally manufactured, and is going for say 500,000 naira, and then the one that is foreign that is equally good, if not better, is going for 250,000 naira. What are you gonna go for? You're gonna go for the cheaper one. So when it comes to money, following the money doesn't follow patriotism. It follows like your pocket, your ability to afford, and so that's what government should drive. So it should not, it shouldn't discourage local manufacturing. In fact, it should encourage local manufacturing, but then it should make them more competitive by giving them all the support that it can to make them competitive, but not at the detriment of ordinary Nigerians who are looking for cheaper quality goods and services. That is really what matters at the end of the day because if you don't do that, you're going to have high inflation. And when you have high inflation, you're going to have exchange rate depreciation. And then you're back to square one because those local manufacturing companies will not be able to cope, which has been the story of Nigeria over the last 8 years. You see that? So it's not that easy. We do need local manufacturers, local manufacturing capacity in Nigeria, but it has to be competitive. It just has to be, and you can't manufacture everything. So you have to ask yourself, what is it that you can manufacture as a country that requires less raw material input that you have to import? And I think that's what matters, and that's what a lot of people have been discussing, and that is why it appears the government is moving on.
Good
Yes.
morning, Bukola and Ugo. The Dangote refinery is a major plus for POP. I really hope 60 million barrels is delivered as and when due consistently as for Benin Republic way to go as we move towards AFCTA. we must also increase our productivity. This is coming from JP.
Yes, JP, very good point there. We must move towards productivity. And I agree with you. That is essentially what the government is focused on doing, and that is likely what it's going to keep doing from now on. It's going to be focusing more on increasing, maybe not, maybe we shouldn't call it productivity, but trade. Trade is what it needs to keep improving. And yes, we're going to move on to something else that caught my attention during the week. Forex, as usual, caught my attention during the week, and the exchange rate at the official market sunk to an all-time low, 1,099 to the dollar, and that was the exchange rate in the official market. This is not black market, official market. It's about 1,100. So you're now seeing that the official market and the black market is almost close to each other. Like I've always said, it's gonna be between 5 to 10% disparity. And so at 1,100 that it closed last week, it appears that there was a massive devaluation that happened over the last 2 days. Of course, people would not ascribe that to devaluation because you might end up today and it strengthens again, like we've been seeing, like a yo-yo. So it might go back again to 800 something naira. But the essential thing is that it did drop to 1,099 naira to the dollar. So the dollar is pretty strong globally right now. U.S. economy is blossoming, is stronger. They had another strong jobs numbers last week, and that is also putting fear that the U.S. Fed might not cut down interest rates. And in case you're wondering, how does that affect Nigeria? If interest rate is high in the US, then most investments will remain in the US. And so that means a stronger dollar because they are not going to want to invest in frontier markets like Nigeria, which we do need because we need their dollars. When their dollars come into this country, then the exchange rate is stable. You're nodding your head. You're from Nigeria. You can't change that. Like you're from a frontier market. I mean, imagine if you're from the US. Frontier market. So that's those are just all the things that we got to deal with. Third world problems. That's what they call it, third world problems. So we got to deal with third world problems. And so the exchange rate weakened on Friday. Not clear what it's going to look like this week, but I think what is clear is that officially the exchange rate between naira to the dollar did cross 8,000 naira, and it
So how are we
ended at
going to
one thousand
stabilize
one.
this now? I thought at some point there were some actions being taken to help reduce, and we're being promised that as at this time December we might be hitting the 700, and look at
Ah,
where
make
we
me
are.
laugh.
Look at
Ha
where we are.
ha 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 ha. That ain't happening. Not now. Not now. Not now. It's gonna take a while before you see. Even if that happens, I think. Look, guys. Like, let's be real. It's not about whether it's 2,000 naira to a dollar or 3,000 or 200 to a dollar. It's about stability and predictability. I think that what we don't want and what we should pray never happens again is that constant depreciation that we experienced at some part this year, where every day is adding 10 naira, 20 naira, 30 naira, and on and on and on and on and on. We don't want to experience that this time around. That's not what we want. We want to have a market that is fairly priced and that is determined by realities. But what is happening now is there are, unfortunately, a lot of people that are, going to be facing a lot of hard times. I'm already hearing that people who have like kids abroad are now considering bringing them back because it's difficult. A lot of them earn money from Nigeria and have to convert that money to dollars and send to their families abroad. Because you see, it's not that simple. Usually, so let's say you have a family of five, like husband and wife and three children, right? And so typically what happens is that the wife probably travels and goes with kids, right? And probably in school. And all the while that the wife's in school for at least 1 year, the guy is going to be here footing a lot of all the bills. And so most times you probably go to countries where the children don't pay school fees, right? And then but you got to pay your wife's school fees, and then you always have to send upkeep. So as at early part of this year, last year, there were, you could get FX for something because the government was essentially subsidizing because of fixed exchange rate. So that is not happening again. exchange rate now is close to black market rate. So there's really probably no point going to the bank to go and buy the dollars. Because then if you go to the bank to buy the dollars, they're going to give it to you. So you're probably going to go to the streets and buy the dollars at 1,002. So think about it. When you made that decision, say a year ago or a few months ago, you made the decision thinking that you could get dollars at 400, 450, 460, or even 800 if it was at the black market. But now it is moved to about 1,000, 1,002, and maybe your income hasn't actually changed. So what then happens? Something has got to give. Something has got to give. So a lot of Nigerians are walking on a tightrope because of this FX situation. But of course, follow the money with me on Classic FM at 7.3, and of course on Spotify or podcast and anywhere that you listen to podcast, whatever app that you use. And we do this every Monday, 8 to 8:30, 30 minutes straight up economic and markets related discussion. And of course, talking about follow the money, because that's what we should really focus on. We want to make money, isn't it? And there was a lot of money made in the stock market last week, in case some of you did not know. First Bank, one of Nigeria's oldest bank, joined the 1 trillion market cap. Yeah, so it is now a swoot. A swoot essentially is stocks worth over 1 trillion naira, and there are not a lot of them out there. Dangote Cement, MTN, Airtel, Boa Cement, Boa Food, Zenith, and GTB. Seplat make up the list of suits, and just recently they welcomed First Bank into the suit class. Um, of course, Nestle used to be part of that, but hard times for Nestle, and Nestle is no longer part of the suite. But they did, were there at some point. So stocks are still making a considerable amount of money, and of course, banks appear to be one of those sectors that are primed for making some good money for investors. Most of the banks that I know have doubled in terms of their value over the last year to date. Year to date, actually, it doubled. And so, for those that are also looking for where to invest, there are investment opportunities everywhere. There are investment opportunities in equities. There are investment opportunities in buying mutual funds. There are investment opportunities in buying fixed income securities. Do you have money that's just lying in the bank and you're not doing anything with it? You have to ask yourself, what else are you doing to make extra income beyond your salaries? Or are you just sitting down waiting for your salaries to hit your account? Every week, how much have you made additionally beyond your salaries? And I think that's really what you have to be thinking about. And if that is not something you've been able to solve, then you are not following the money. You got to follow the money. Find out where exactly is money being made in this economy. Because whenever there are economic challenges, trust me, money is being made somewhere, and people are making this money per second. That is my show for this week, Bukola, and I hope you do have a nice day. Of course, if you have questions for me and you want me to take it on this show next week, just tweet at me at Ugodre or at Nairametrics, and we will create that tweet and share. Of course, if you miss any part of the show or any like you want to just rewind and listen to it again, it's going to be airing in another 2 to 3 hours on Spotify or your Apple Podcasts or anywhere that you listen to podcasts. It's going to be there right there. And just search for Follow the Money by Ugodre and follow it, of course, and then you can listen. That is the show for the Super Caller. Thank you so much.